So next up we have our old friend the euro dollar. Now this has been, having had a good steady trend up the first couple of quarters of this year, we've expanded the volatility into a sort of broad consolidatory phase in the euro dollar. Now in and amongst this though, we have some fairly significant levels, not least the 143.33. The 143.33 or 143.37 is the level that dissects this consolidation. It's right through the middle of it, and it's actually, we held the 143.33 quite well for a period of 4 or 5 days, and over the last couple of days it's given way, and today we are now below the 143.33 and the 142.81. Just to give you a reminder, the 142.81 is this standout high here. So this is a significant turning point in the market, and it's positioned just below the 143.33. So having the two levels close to one another gives us a decent opportunity to allocate ourselves into a position. And just below the 42.81 we have the 42.47, which is this momentum high in the uptrend in the euro dollar on the way up. Now in terms of structure then, we have again, and we do not have a structural failure point as such until we get down into this territory for a major trend reversal. But we do have the market giving us some clues. We're making, this week we've posted a fourth lower high in this phase. Now we've made a lower high in the euro dollar even with apparent bearish dollar news. This does not look, see this euro dollar does not look any different to previous price action over the last few months. It's had periods of risk on, risk off, risk on, risk off. You know, is the euro settled? Is it not? Is it settled? Is it not? And it's just, you know, good news, bad news after one another. It's this series, but it's at least it's consistent in its price action, this euro dollar. Now what do we do in terms of structure? Well, from here it's not obvious because we're right in the middle of the broad period of consolidation, but coming to the market here, our structural long from here has to be, the biggest level in here is, and I'll put it in purple so we can reference it, the 143.33. That has to be our structure to the long side, the 143 143.33 or 143.37 to be more precise. That's our structural long. It is, technically speaking, our structural short. That's a level where we want to be long above and short below. So given that we're below the 143.33, we are short. We have a bias to the short side, but because we're already below it, in terms of identifying a new structure in addition to the 143.33 to the short side, we've got to take the 142.47. Now, the benefit of taking the 142.47, which is our momentum high in the uptrend, is that below this point we are below two other significant points within the price action. And today's candle, see today's candle, we've accommodated all three. At some point during today, we've accommodated all three price points in one candle. So our structural short then is going to be the 142.47. Structural short 142.47. Structural long is the 143.33. Moving into 200 tick, we can see, look, over the last few sessions, the bias is to the downside, making lower lows and lower highs. And you can see how very clearly, you can see how these significant points, or these structure points from the daily, are respected pretty acutely in the price action on the 200 ticks. Here's the 143.37. We hit it once, twice, three times, and then we break with momentum. It's like a floor. So you hit the, it's weakening each time you hit it, and then we give way with some momentum, and then we push straight down to the 142.81. From this point we trade up. Look at these points being respected. From the 142.81 we get to 143.37. We then trade precisely back to the 142.81, and we consolidate in today's session around the 142.81. We actually trade above it for a little while, and no short covering is coming in, and we have a little momentum push down now to the 142.47, which is where we now lie. So we're going to have, this is a nice situation, because our structural long and short are going to be our short-term long and short points as well. So on the 200 tick, then we can put the structural short in red to indicate our short-term sell, and we're going to put the 143.37 or 143.33, as a lot of you know it to be, in green as our short-term long point. So this is a good situation where our structures are the same as our near-term positions. Should we be going short at the 142.47? This is also pretty tidy. We can have our stop to accommodate the 142.81. So going short here, our stop wants to be the other side of 142.81. So the short stop is 142.81, which is another significant level on the daily. Going long at the 143.33. We don't want the market to come back below this level, because we know where our bias is to the short side. So we're taking a counter move here if we're going long. Going long at that point, we want to have the stop pretty tight in. So we're going to have the stop at 143.20. So you don't want to give this the opportunity to do what it did here. Okay, you see what it is capable of here. we can reject this level, 143.33. We've seen how important it is here. Okay, we traded through it, didn't short, there was no shorts getting out, there's no short covering rally to take us up to the 144, and we just rejected it and had a move down. We don't want to be caught in that condition again, so we want a nice tight stop if we're going long at the 143.33, because we know we're going counter trend. So the stop is 143.20. Okay, so that euro dollar, we have nice clear levels that will accommodate significant points on the daily and short and long points on our near term. Okay.